Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
Good. How are you, Will?
Doing all right. Keep getting some more rainfall. Driving across I-70 yesterday from Ohio to Missouri is kind of sprinkling throughout Indiana and Illinois, but got a decent amount of rainfall here in Missouri overnight.
Yeah, got just a little under an inch in my house south of Columbia last night. So a little bit more rain. The ground is saturated. The creeks are now running. There for a while we were getting rain and it wasn't running off. It was just soaking in. But
Uh,
I think we're catching up.
yeah, I think a lot of farmers across the Midwest are getting pretty anxious to get rolling. But
Sure. Yeah.
Ben, we've got some positive adjustments week over week looking at the market prices. A quick rundown here. July 24 corn up 20 cents at 469. December corn up 16 cents at 488. July soybeans up 66 cents at 1248. November soybeans up 41 cents at 1219. Soybean oil on a cents per pound basis for July down 0.53 cents at 43.84. Soybean meal by the short ton was up $30.30 at 387.60. The July wheat crop is up 40 cents at 648. And then July 2025 wheat up 35 cents at 716. And then that West Texas Intermediate crude oil contract down $4.33 for July at 77.76. So Ben, a lot of medium kind of level gains we're seeing across the board for a lot of things here. That WTI contract dropping just a little bit.
Yeah. If you're a producer, you like these numbers. Higher output prices, lower input prices. This is a good week. I was getting texts yesterday from farmer friends, and they kept saying you gotta be a little bit more positive with grain market. Some of this negativity is kind of getting us down. So it was nice to have a strong week. It seems like every commodity is participating in some type of bullish story right now, right? So like I'll just quickly go through these. Corn, planting progress has really slowed and the weather outlook continues to look wet. You kind of teed this off on the opening a little bit. That's starting to get people's attentions in terms of, are we going to get all the acres planted? And then what percentage of the US corn crop is going to get planted late? That kind of helped rally that. When we look at that soybean complex, the flooding that we've seen in southern Brazil that could impact 10 to 15% of their production, the southern Brazil production. Plus, we've got some protests in Argentina that is delaying soybean meal exports, which is rallying that soybean meal complex and helping lead the whole soybean complex there. And then in wheat, it continues to be very dry in the Western Plains. They got some rain overnight, but it's also very dry in Russia. And with Russia representing about 25% of the global supplies or exportable supplies of wheat, that is having an impact there as well. So all of our commodities participating in a little bit of a bullish supply side rally at the moment.
Well, Ben, one of those points you mentioned, you talked about some of the pressure that we're seeing in South America, looking at the rain and disease pressure down there. How big of a factor is that going to be looking at that soybean complex at boosting that and providing that upward push that we've been seeing over the last little while?
Yeah, let's start with soybeans, just because that's what you mentioned. For those that maybe don't know, there has been a persistent and consistent rainfall that has created widespread flooding in the southernmost state of Rio Grande do Sul, which is in the southernmost part of Brazil. Widespread flooding. We're talking about whole towns underwater, and you might have seen videos on social media of Brazilian farmers trying to harvest in flooded fields, basically. The expectation is anywhere between 10 to 15%. That could be about 3 to 4 million metric tons, depending on a number of factors, right? Like there's just a lot we don't know at this point. But 3 to 4 million metric tons, certainly reduces global supplies. It's not enough really to ration prices overly higher yet. If it continues to develop, that could be a problem. But when we think about uh, I guess like when I think about trade right now, the Brazilian soybeans are still the cheapest, most competitive soybeans on the market. But we've seen those prices start to move a little bit closer to the U.S. prices. So that could potentially provide a market opportunity for us to move a little bit higher as well.
Well, and when you look at especially that rainfall across the, Brazil and Argentinian areas, you think about the issues getting a lot of that crop out potentially, but also the quality concern then that might provide having oversaturated ample moisture within those harvested crops and trying to get that dried out for shipment and delivery. Ben, looking elsewhere, just a little recap from last week, news item we got from the GREET model. Got at least a temporary kind of setup for that, but it seems like the way the US is kind of set up right now might struggle to really capture that value within agriculture for just a little while. So what are we looking for through, the sustainable fuels markets as we move forward from a US standpoint?
Well, a little bit of positive and negative, depending on how you want to look at it. And certainly, I think we even saw that within the industry with different commodity organizations having a little bit different of an opinion on the overall, announcement. So the U.S. Treasury and the IRS did provide guidance on the sustainable aviation 40B tax credits. So these are tax credits that were provided, or at least there was some guidance given through the Inflation Reduction Act as to how these tax credits would be operated. These currently go through the end of the year, so 2024, and it did provide a pathway for ag products, corn-based ethanol, soybean oil. It did provide a pathway, so that was the positive that I think many commodity groups, highlighted. The negative was that it came with restrictions, cropping pattern restrictions. So for corn, there was three cropping systems, including cover crops, no-till, managed nitrogen or fertilizer application. And on the soybean side, there was two, and producers, must follow those to be able to qualify. So it kind of creates a system to where now producers are going to have to verify that and track that, and it's going to have a almost like a processing and logistics component to it now as well, because now it's for lack of a better term, it's very similar to organic production in a way, right? You have to prove that came from organic land, and there's going to be some headaches with that, right? So that was kind of, I think, seen as a negative as well, even though there was a pathway for them. The other negative was there was no guidance given on the 45Z tax credits, which will be the tax credits that start at the beginning of January of 2025 and replace these 40B tax credits. The administration said that they will continue to work on coming up with guidance on that. And I think that left many organizations saying, hey, we've got this far. We want some more clarity, and there's a lot more work to go to get clarity on those 45Z. So unfortunately, not a whole lot of information still. One would think that the 40B tax credit is a starting point for the 45Z, but we certainly don't know that even either.
Well, and Ben, it's one of those things where here in the last couple of years, we've seen input prices skyrocket, and they're coming back down now as we're, slowly tracking downward. And you talk about, some of these logistic challenges that might be added onto ag producers' plates. That's just another time suck, another money suck. As one of those things where, you have to make sure it pencils out. So I think it'll kind of depend, and we'll see how this all develops in the next coming years. Not very insightful to say, let's wait and see, but that's kind of how some of this feels. But Ben, looking forward, we have a pretty big report coming out on Friday with the updated global ag supply and demand estimate from USDA. So what are you expecting from this WASDE report?
Yeah, so the May WASDE is the first WASDE where we get USDA's new crop balance sheet. So it's 2024-25 balance sheets. I don't anticipate a whole lot of changes really on the old crop side of the picture. We might see a little bit of a reduction in soybean exports for international production in those old crop numbers. I do anticipate, downward revisions across the board for South American production, namely in that Argentina corn, right? I think we're still trying to figure out how the leafhopper and the disease pressure in Argentina is impacting that crop. So I'll be watching that number closely. So those are on the old crop side. On the new crop side, I do anticipate that USDA will use their March planting intentions report as their starting point for acres for corn and soybeans. I do anticipate that they use their trend line yields that were published back at the Ag Outlook Forum in February as their yields for new crops. So you're going to see a 181 bushel per acre national yield in the balance sheet. Of course, I think there's some discussion now about have yields kind of plateaued a little bit, and is it realistic that we can get to that 181, especially with some of this late planting, potential for the size of the crop that's going to be planted late. that 181 is going to be picked over, but that's where I expect USDA to start. And that's going to create kind of a bearish picture for our new crop markets. Now, we've seen the new crop markets rally here in the last couple of days on planting delays because that impacts new crop supplies. Those aren't going to be represented in this May WASDE, is my opinion. And so the question that comes to mind is, how do traders treat these numbers? Does it create kind of a wake up call of, hey, this is kind of where we're still at with burdensome supplies, or do they just completely reject the WASDE balance sheets and continue trading in the scarcity of new crop supplies mindset for the time being? When we look at those new crop carryouts, we're looking at almost 200 million more bushels of corn next year than this year. On the soybean side, almost 100 million more bushels of ending supplies relative to this year. And then on the wheat side, almost 90 million more bushels. So all up 100 to 200 million bushels year over year. Certainly that's plentiful supplies, but we don't have as much room as what we initially thought. And so we could get, we can see market shocks. I'm pointing to the side over here because this is my market screen. We can see these shocks in markets from different storylines when we're at supply levels like what we're seeing.
Yeah, well, and Ben, it's like you say, trying to figure out exactly which the market's going to value more. It almost seems like this report could, slow down some of the gains we've seen in that new crop picture. But like you said, if that rain pressure continues to hold up, that's gonna not slow it down for too long. You wouldn't imagine as we progress through May here. So Ben, outside of that report on Friday, what should farmers and ranchers be paying attention to for the rest of this week that could move the market?
That's the big one there on Friday. Of course, the Foreign Ag Service also puts out their estimates. It kind of combines all their attaché offices around the world. It'll come out right after the WASDE report on Friday at 11:30 Central Time, and so that'll be of interest too, given what we've seen in South America, both the flooding and then the leafhopper disease. I'll be very curious to see what those reports have to say about growing conditions down south. So.
Sounds good. All right, Ben, it's always a pleasure having your knowledge and viewpoints on the program here. Viewers and listeners, if you'd like to learn more about us and what we do or our sister program, the Weekly Livestock Market Update, you can do so at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.